Hi, this is Naylor of Naylor Accountancy, your partner in finance. This is our webinar update. So throughout COVID, we've been doing them weekly. And now what we're doing is just doing them when we need to. So with what happened with Rishi Sunak last week, it was definitely worth doing one. And we tried to get it in September because we want to do one a month. So that's why it's a Tuesday and not a Thursday. So it's the 29th September, 2020. So what happened in this date? In 2008, we had a big crash on Wall Street with going down the highest ever of 777 points, which was due to Lehman Brothers going bust, bankrupt, basically. On a better note, it was Buddy Holly's second hit. Oh boy, I'm a big Buddy Holly fan, and my kids are now too, to their surprise and everyone's surprise. And it was also the first Rolling Stones concert. Amazing, they're still going all these years later. So what we're going to do in this one is cover just where we are with the furlough and everything, what's happening with what's out there already. And then we will actually go into the new stuff that Rishi Sunak has brought in, the Chancellor of the Exchequer, just to highlight what they are, see if it's actually worthwhile doing. And then also talking a bit about the Apprenticeship Scheme as well, which Steve has done a lot of research on. And the details of that came in probably about 2-3 weeks ago. So we were wanting to do this webinar anyway, but we wanted to consolidate it with what Rishi Sunak was mentioning. So the first thing we're going to just talk about is the furlough scheme wind down. Now, it's winding down. The 31st of October is the end dates for the furlough scheme. We've done loads of furloughing for people, which has been a lifesaver, especially at the start, when there was basically no work at all with the full lockdown. Now people are weaning off them. There's less and less. So what we've got is just like the last few months. So September is the second to last. And that's where you get 70% of the normal wage as claimed back. You're still paying pension and national insurance. And then in October, it goes to 60%. Obviously, you're topping up to 80%. So in September, you were paying 10% of the salary, unless you wanted to do 100%, which we have some people doing that. And then in October it's 60% of the normal salary that they get from the government or you get as a grant. And you top up the 20% or more. Now, there's also the bonus scheme. Now, this is the 1,000 bonus scheme per employee still employed in January 2020. That's been on furlough. Now, we do have people that have been, I would say they're going to not claim this because they don't need it and they don't see it's right because it's taken from the government. But if you need it, do utilize it, because we do know businesses are struggling. Some aren't, but some are. So Steve, was there anything you wanted to just add on the furlough scheme wind down before we move on to the next one?
No, the furlough scheme wind down, it's fairly straightforward. As you say, we've pretty much got the hang of the furlough now, possibly why the government's brought in a new scheme with completely different calculations. But yeah, and we've got the flexi furlough at the moment, so it's possible for people to work and claim part furlough as well. But yeah, yes, that scheme is coming to the end, and the government have decided to not replace it with the similar, even though they're really extending the lockdown, and we shall cover that in a moment.
Yes. Now the next one is the one that's actually replacing furlough scheme, which is the job support scheme. Now on this, it comes in the 1st of November and it runs until the 3rd of April next year. So this is whereby that the employees has to work a third of their normal working hours, and then you can claim a grant of a third from the government and the max, and then you have to pay the other third. So basically, and another third that the actual employee doesn't get of what's not being paid. So effectively, they get 78% of their salary if you don't top it up, because that's you giving a third of the 2/3 that didn't get paid, and then the government giving a third of the 2/3 they didn't pay. That makes sense. So there is a maximum of £697.92 that you can get per month per employee if they only work a third, because you can obviously get them working more than a third. You do have to pay national insurance and pension, which is the same as the furlough scheme. And also, you can, if you're on the payroll or someone's on the payroll on the 23rd of September, they can apply for this, or you can apply them for it, and they don't have to have been on the furloughing before. So just on some of the numbers, if the person that you want is actually going to work 50% of their normal hours, that would mean they get 83% of their salary. If they are on 70% of their hours, it means they get 90% of their salary. That's because, so say just on the 70% side, is that what's not been paid is worked is 30% of the normal hours. You have to pay 10% of those hours. Government pays another 10% of those hours, and the employee doesn't take payment for the last 10%, unless you want to pay that, obviously. So looking at all this, the issue is that if you have 3 people, if you want to keep them, that's great because you want to keep the skill set, but you'd be better off actually only employing 1 person and getting that person working full time rather than having 3 people. It's going to cost you more if you're just looking at a pure figures basis. But if you want to keep those skill sets, it's worth doing the third. Steve, is there anything you want to add on to that?
Yes, I mean it's this third of a third thing is sort of a bit confusing. So yeah, the employee have to work at least a third of their hours, and the thirds that the government and the employer have to make up are a third of what's left over. Now, I mean, one thing I would say is the initial guidance says employers are not expected to make up the difference. Now, there has been some debate on whether this is just it will be frowned upon or whether it will actually be forbidden. Hopefully the information that comes out before the scheme comes into effect for beginning November will clarify that. But I mean, as it stands, effectively the government is saying of the wages that the employer is not working, 1/3 covered by the employer, 1/3 covered by the government, 1/3 taken as a cut by the employee. Now it's marginally below the furlough amount if they are just working the 1/3 hours. So some people might not see that as worthwhile for them. But really, this is a scheme that it's only really worth taking on if you have people that you really want to keep and that you expect to have work from for in the beginning of next year. It is otherwise a very expensive way of staving off redundancy. If redundancy seems likely anyway, it will almost certainly be cheaper to go ahead with redundancy rather than take on this scheme, because once an employee is in this scheme, you cannot start redundancy proceedings at all. So literally, once they're in the scheme, they are redundancy proof until such time as you take them back out again, which means you are the minimum extending the period before you can actually make them redundant if you genuinely will not have anything for them. So yeah, it's a lot less generous. This is something we were expecting. Really, it is only if someone is absolutely vital and you know your business will pick up the beginning of next year and you will be able to get them back up onto full hours again.
Yeah, and it's worth noting that if you are wanting to get them redundant, you can't start redundancy period if they are in the scheme, just the same as if they're in the furlough scheme. Okay, now new apprentices. Now this is my lovely little children. They are a lot bigger now, but this is when they were just going off to their primary school. So new apprentices. The scheme has been open since the 1st of August. We've literally only just got details of it last 3 weeks, I think, Steve. I can't remember. I think it's 2 to 3 weeks. It runs from the 1st of August to the 31st of January. Now, with this scheme, the apprentices, they can't have been working within the last 6 months prior to starting it. And claims under the scheme have to be made from the 1st, or can be made from the 1st of September. and they made through an apprenticeship service. I mean, Steve's going to tell you more about this. I'm just telling you the very basics because he's done a lot of research on it. And the payments that they should be like £2,000 for those from 16 to 24 years old, and then 1,500 for 25-year-olds and over. And that's payable in 2 installments, 190 days after they've started, and then 365 days after the apprenticeship, so a year. Now, Steve, I don't know if you want to, I mean, you've been looking at this in detail, and so it's probably better you say whatever you think is relevant now.
Yeah, I mean, essentially the scheme is to encourage people to take on apprentices. The application has to be done through the apprenticeship service, but if you're going to look at this, you want to really be engaging with the apprenticeship service anyway, because it's all about job relevant training. So you'll need a local training provider, and if you can get the right local training provider on board, they can do a lot of the spade work for you on this. In a previous job, I had an apprentice, and because I had access to the apprenticeship service, I could see all of the applicants that had come in, but the training provider was doing the initial interviews, and some of the applicants that came in, I did have to wonder how they were functional adults in the modern age. Their applications were appalling, but I wasn't seeing them. The training service provider was filtering them out before we got to the interview stage. So the people I interviewed, they were all good for the job. The person that I took on, they had the right attitude, the right things learning. So I mean, apprentices generally are a good thing. I think probably not a lot of people are actually looking at doing it at the moment, because it's still taking on a new employee, and it's still someone you're having to train to scratch. So there's a bit of effort involved there. But the real advantage is if someone's applied to be an apprentice, they're enthusiastic about doing the job, and you're able to mould them to your way of doing things. You don't have to break them off of habits they've learnt in a different job which don't fit well with the way you work. So yeah, there's this extra grant for taking apprentices on now. I'd say overall the apprentice scheme is worth getting involved in, but get a good training provider in to help you with that. They'll not only provide the good training that you actually need for an apprentice, but they'll also take out a lot of the hard work of taking someone on voyage.
Thank you. Now that moves us on to the next one, which is the Kickstart. So the Kickstart scheme sounds amazing. It sounds absolutely amazing, because basically it's a grant that the government will pay for 25 hours per week at the applicable sort of national minimum wage for that person for 6 months. And that's the 6 months on this scheme. And it includes national insurance and pension contributions. And there's also an additional flat payment of £1,500 for setup costs. But there is a caveat here. You have to have a minimum of 30 job placements have to be created within a group. So Steve's been looking into this more, because obviously that precludes virtually all of you and all of the people that we work with, because there aren't any of you who would actually want 30 people. So I'm going to hand you over to Steve, because he's been looking into and researching how you could get over this if you need to. But I'll hand him over to you, Steve.
Yeah, the 30 placements thing, it was a very late addition to the scheme, and given the original announcement was all about businesses, national, local, being able to take people on 30 is something that's going to put most people in the small to medium enterprise area, which is the people we generally deal with out of the scheme. But there is a way of doing it, and the way of doing it is you get together a group of employers who between them can meet the 30 placements. Now there is a list on the HMRC website, and I shall be adding a link to a post on the Naylor blog for this as well, for groups that are known as Kickstart gateways. A lot of them are trade groups of one sort or another. Some of them are just national groups that have decided this is a good thing to get into. Because we haven't actually made any applications to these ourselves, we don't know if there will be fees involved for getting onto these things, or how complicated the application process will be. So some of them are trade groups, so they're only accepting applications from businesses in that trade. And would think with trade groups, it will normally be a case of you're already paying to be a member of the trade group, and therefore the fees associated with that should be minimal. But say I will post a link to the list of organisations that are already doing this. It is possible to set up your own Kickstart Gateway group, as long as you can get together sufficient employers to meet the 30 placement limit, but there are strict criteria for someone to do that. The representative of the group has to prove they have a history of being able to work with multiple third parties to organise things like this, and they have to prove they have extremely robust internal procedures to make sure the whole thing is handled properly, and any funds associated with it are handled properly. So it's possible, but for the vast majority of employers, that is just going to be too much hassle to work with. If you think it's something you'd like to get involved in, you're much better going to the HMRC website. Say, if you search for Kickstart Gateway, or say look on the Naylor blog later, where I shall be adding a link to that list, you're much better off looking at signing up with one of the groups that is already in place, that already presumably has 30 plus placements on, so you can get in and just get a 1 or 2 placements for your own business.
Now, we're covering this as well, which is just termination. The reason for that is I know some of you have already terminated people, which is sad. Some of you have had to do it right at the start, once furloughing stopped, because of the various sectors that you in just aren't, there's no business basically, and you're pivoting now to actually look at doing other things to bring other income in instead, which is really good. In order to make sure that you survive, you may need to look at termination payments. And obviously you've got statutory redundancies, which I don't know if you want to go through, Steve, I've got it here, or you can also enhance it. There is a 30 grand tax-free allowance that you get on whatever the redundancy payment is. That's not the same as any sort of runoff of, in lieu of holidays. That's taxed as normal, and it's not tax-free on your notice period either. This is actually redundancy that's above that. Steve, do you want to go through it? I have the notes here if you haven't got them there. I'm happy to...
No, that's fine. So yeah, statutory redundancy is the minimum you have to pay to someone that's been made redundant. It's dependent on 2 things: how long they've been with you. They have to have been with you for a minimum of 2 years to qualify at all, and also what age they are. And the way it works is they get half a week for every full year they've worked for you under the age of 22. 1 week for every full year they've worked for you from the ages of 22 to 40, and then 1.5 weeks for every year from age 41 onwards. It's a maximum of 20 years qualifying, but that's counting backwards. So if they've worked for you for more than 20 years, they will get the respective years of working at the highest possible rate that applies, and it is full years that qualify. If someone has worked for you for 5 years and 11 months, their statutory entitlement is only for 5 years. It is possible to pay more than the statutory redundancy if you wish to, but that's the only obligation for complete years. As Nikolai said, the first 30,000 of redundancy is not taxable on the employee, provided this is not something written into their contracts. This is what's known as the golden parachute. This is more sort of big executive level thing, where big executive, as part of their take-on contracts as agreement, they'll be paid a sum of money if they are terminated. The majority of ordinary contracts will not have that in, and therefore anything paid on redundancy up to 30,000 will not be taxable for the employee. But yeah, as Nikolai also said, any contractual payments, so payments for holiday due, payments for not keeping the employees on through the notice period, that will all be taxable through PAYE as normal.
I'm just going to stop sharing now. I mean, there's a few other ones as well. So with that, the one is sort of additional self-employed grants that are coming in. So let me just pull this up. So yeah, I mean they come in And we basically, I don't know if you want to go in more about that on the self-employed grants, Steve. Well, I can't hear you. You're on mute, sorry.
Yeah. Basically, because they've extended the support for employees with the job support scheme, they're doing a similar-ish extension to support for the self-employed. So it's for 6 months in two sort of 3-month sections. The first new grant will be at 20%. The final one, we don't know what the percentage will be. We don't know when you'll be able to apply for it. We're just aware that it is supposed to happen at some point, about 3 months' time. The criteria for applying for it will be the same as before. So if you did not meet the profit criteria, the ones where you had to have more than 50% of your income in 1819 as self-employed income, and you didn't qualify if that was more than 50,000, all those will still apply. The only thing that's possibly going to make a difference to people is the adversely affected criteria. So it's possible that people have not applied for the earlier self-employment grants because earlier their businesses were fine. It may be now with the extended lockdown, they're now being adversely affected. Essentially, the application for each grant is at the time that grant applies to, you were adversely affected at that time. So some self-employed people still being adversely affected will be claiming grants all the way through. But if you haven't claimed grants up to now, but now you're being adversely affected, you will be able to claim these admittedly lower percentage grants.
Yeah, and it's, as Steve said, it's 20% of your profits of the 1819 tax return and a 3-month pro rata, and that's the cap is like 1,875, and it's a one-off payment in full, so it's a lot less than it has been before. And then there is a fourth one coming in Feb, which we have no idea about, but we'll see there. Then the other ones is just, I'm going to just go a few like the bounce back loan and the CBILS, that they've been extended, where you can extend the payback period to 10 years from 6. So I'm not sure how that's going to work. I'm guessing it's just going to be talking to the government, to the bank manager. Have you anything to add on that, Steve?
Yeah, essentially the government announcement is originally all of their guarantees for the bounce back and CBILS loans were just for the loans running for 6-year period. So all the government has said is we'll cover them up to 10 years instead. So to a certain extent, from the bank's point of view, they're still getting the same security if they extend the loan over 10 years because they're getting the same guarantee. But at the same time, they're not getting 100% claim back on all of these loans. So extending the loan period is still increasing their risk. And also, even before they make use of the government guarantee, they have to put in every effort they can to recover the loan from the original creditor, from the original company it was given to, which again, if it's extended to 10 years, may prove more difficult, more expensive for them. So whilst the government will accept the loans being extended to 10 years, you're going to have to talk to your own bank managers to whether they are happy to do it. I know with the CBILS loans, even with the government announcing the 8% guarantee on it, not all banks were willing to offer it because there was still a risk to them on the loans, and not an insubstantial one with the amounts that we were talking. Similarly, something else that was announced in there was that there will be a possibility to take a 6-month interest and or payment holiday on loans within these schemes. Again, that is almost certainly going to be something for negotiation with the bank. You're allowed to do that if you are in difficulty. You won't be breaching the government's guarantee by doing that, but whether the banks will be happy for that in all cases, I don't know. So if you want to take advantage of either of those, it's time to talk to your bank manager and see what terms they specifically are offering.
Thank you. And then we've got obviously the deferred VAT, the one that we did from March to June, which we sort of said for you all to do just to make sure you got it, because it's good for your cash flow. You can save it so you can pay next year, which is going to be the 31st of March. Now they've just said you can spread that over 11 months. And that's the same as the self-assessment tax payment as well, which I'd be a bit concerned if you had to do that one as well, but it'd be worth doing anything you can just to make sure you get the cash in your bank and you can actually utilize it if you need it in the future. Steve, I don't know if because you've been looking into this in more detail.
Yeah, so the VAT deferral, every VAT registered business would have had a single quarter that fell within the period for deferral. Deferral was automatic. Essentially, if you didn't pay that VAT return, it was assumed you were taking advantage of the deferral. Similarly, the second payment on account, which would have been due 31st of July, the deferral on that was automatic. That's personal income tax, the payments on account. Now, the VAT would have been due 31st of March next year. You will be able to spend that over 11 months, so you're not paying 2 quarters of VAT at the same time. If business hasn't picked up, then you will have to apply for the time to pay there. That is not automatic, unlike the original deferral. With the self-assessment, it's not just the payment on account that can potentially be spread over 11 months from 31st of January 2021. It is in fact all of the self-assessment tax to do with 1920. And in fact, this makes sense. If there was somebody that the previous year hadn't made payments on account and therefore couldn't have taken advantage of the deferral, they would have been severely a severe disadvantage, not being able to defer their actual 1920 tax liability come 31st of January. So yes, it's supposed to apply to all amounts due 31st of January. Whether it's worthwhile doing is another question entirely, because it's just deferring. The problem isn't making it go away entirely. And again, for the self-assessment time to pay over 11 months, it is something you're going to have to apply for. So it's probably best to look at it soon rather than later, because I suspect those systems will become somewhat overwhelmed coming up to the due dates.
Yeah. And then, I mean, on the VAT, obviously, if you've got large VAT payments the 31st of March next year, plus the normal VAT, it may be advantageous just to branch it out over 11 months. Also, if it's better than getting a loan because it's interest free. Now, the last thing that we wanted to just bring up was the 5% VAT rate. So Rishi Sunak has just said he's going to extend it to the 31st of March 2020. So what that means is that when we go out to eat, it should still be cheaper on the VAT side. So there's other, so that's hospitality, and it's also on tourism as well. So there's an anomaly on the tourism, which we've had a question on, as in if you actually end up buying a holiday, which starts in July next year, this obviously ends at 31st of March, would that apply? So Steve has been looking into this, and I don't know if you're going to get a clear answer, Steve, because I know you've been having a look.
Right. At the moment, it would appear that if you order before 31st of March and you're paying the deposit, then you will still be eligible for the lower rate of VAT. Now, originally this was set to finish 31st of January, which obviously in the middle of winter, we're possibly still going to be very much in the second wave at that point. People maybe wouldn't have been thinking so far ahead as looking at summer holidays then. With the extent to 31st of March, I think people are a lot more likely to be looking at the possibility of booking summer holidays then, and looking at booking them before 31st of March in order to take advantage of this lower rate. I would not be surprised if some sort of anti-forestalling provision was brought in to prevent that happening. So if something is going to be taken significantly after 31st of March, the higher rate will apply. But at the moment, it seems if you book far enough in advance, then you will be able to get a reduced VAT rate. So we shall wait and see for further developments on that one.
Okay, now we've sort of come to the end of what we wanted to tell you, just to sort of update. So I hope that's been useful. Now, if there's any questions, I've got a few here already, which you have sort of given us, so just put them in the box and we'll get back to them. So one question is, Steve, I'll put this to you, Steve. Can you claim the new job support scheme if not claimed at furlough in the past?
The answer is apparently yes. I mean, it is quite surprising, but it is going to be fairly unusual where a business has not needed to take advantage of the furlough scheme up until now, but is wanting to take advantage of the much less generous job support scheme. But no, it's an entirely separate scheme as long as you meet the eligibility criteria of having a PAYE scheme in employees 23rd of September, then yeah, you can claim it even if you haven't claimed furlough in the past.
And what I'd add to that is in the furlough scheme, you had to have the person had to be on payroll in February this year. In this one, it's actually if you're on payroll the 23rd of September. I know I mentioned it, but so the 23rd of September, and then you can actually apply that person to it as well. So next question. If I did not claim the self-employed grant before, can I? I think you've answered that already, but I just
yeah, I covered that a bit earlier. You've still got to meet all of the financial criteria for it, but as long as now you're being adversely affected, even if you weren't before, or indeed you were before, but you just didn't claim the grant in time, there's no reason you can't claim this one. The key criteria, apart from the financial one, is you are being adversely affected now.
Okay, thank you. And then the next question is, do you know anyone who has actually done the apprenticeship scheme or Kickstart?
The Kickstart scheme is a lot more complicated, so I'm not surprised that I don't know anybody that's so far used that one. A little bit disappointed, don't know anyone that has used the apprenticeship scheme yet. I would say that from my experience, the apprenticeship scheme can be a very good way of getting a new employee that works very well with your business. But at the moment, I can appreciate that if anyone is taking on new employees, and a lot of companies aren't, they're wanting to take on experienced employees that can get straight into the work, because it must be said, initially with an apprentice, you're starting with someone that doesn't know your business and thus needs a bit more support, a bit more training than businesses maybe don't feel up to giving at the moment. But hopefully people will take this up. There's a bit of a bonus for taking it on, and you do tend to get somebody who after that initial support period proves to be a very useful employee.
Yeah, and I'll just add to that. I do think businesses are probably waiting just to see what happens between now and Christmas, because nobody knows if there's a second lockdown. I mean, I know you, Bruce, your son's looking for work after university. It's a difficult time for youngsters, so it'd be really good for this to be taken on board by business across the UK. But I do think everyone's just sort of waiting to see. Now, and next question is extension of bounce back loans, 6 to 10 years. How do they do that?
It is going to be a case of talking to your bank manager, and that's all there is to it. Essentially, it's a modification of the contract you signed with them when you took the loan out in the first place. So that modification of contract is going to be something you have to agree with whatever bank you've got the loan with.
And then I think this is the final one, because I've looked into the questions. I think we've sort of answered them. Would you recommend using the job support scheme?
I would say the job support scheme is quite expensive for employers with very little return. So it is a case of if you've got key employees and you really do expect to have work for them the beginning of next year. Otherwise, the job support scheme could well end up costing you more than making your employees redundant now. Not forgetting that once they're in the job support scheme, you can't start redundancy proceedings until you take them out of the job support scheme again. In a lot of cases, employers will find making employees redundant now and maybe even paying agency costs to employ somebody in six months' time will work out cheaper than running the job support scheme. It's really only worthwhile if you've got people that are really good at their job and you expect to have the work for them come early next year, and therefore you don't want to risk losing that talent. It's much less generous than the furlough scheme, and deliberately so, in my opinion.
I'd agree with what Steve says there. And like I said, if you've got 3 people, just rather than have 3 people on this new job support, you better just hiring the one person and getting them to work full time than the other ones all working the third, because it actually ends up being cheaper for you. But it is to try and retain the skill set. Okay, well, I think we've got all the questions done there. Well, thank you, Steve, and thank you all for joining, and I hope that was useful. Do because we've got a YouTube channel. There's not loads on it. It's these. Do subscribe, And also, if you think it's of interest to any of your friends or people that you know, do send it out. And we are looking for new people to work with us. So please just let them know about us here as well. We want to help you, and we are what we call ourselves your partners in finance. Well, lovely to speak to you, and take care. Bye-bye. Bye.